Welcome to Trading Lounge and the SP 500 for the 4th of May. And starting with the monthly chart here, we're looking at wave 4 here with 1 and 2 and 3 here, an expanded flat for wave 4, which will be the A wave, the B wave and the C wave for wave 4 here, and then pushing up for wave 5. There is, of course, a case that wave 5 may be in top here with wave 4 sitting over here. I find it hard to grip hold of that particular count because I just don't count 5 waves up through here. But at the same time, I don't want to stick my head in the sand and say that it's not possible. It's just that it's in 3 waves, so it makes it a little bit difficult. Even the people that have labelled it an A and a B and a C wave over here and then up for 5 here, I find that a bit strange as well. But you know, strange things happen, don't they? So we need to be mindful that there could be a top in play here. So we are looking currently, if I move to the weekly chart here, and we'll just discuss that a little more. So in this instance here, I've got wave 3 here with an A wave here, an A and a B and a C wave here for wave B, and then 5 waves down here for wave C or 4 here. So we're looking at this as 5 waves up here. So in a nutshell, the tech stocks have got the 5, you know, they've led the way most of the way up through here. And they've got 5 waves, but on the S&P, the banking system, Morgans and Cities and so on, their move up here hasn't come as high, and their move also has only come to about this level here, and also their moves can be corrective. So when this wave 1 to 2 comes into play here, then the banking sector, they can make new lows into this space here and then move up from that point. So there's 2 things going on in the market, and we just need to be aware of them, and we need to dance with them. In case of this blue wave, aqua wave 4 here, being not right, and then we've got wave 5 up here, then we would need to look at the market as, in this case, wave 1 down here and wave 2 here. And that means that the market would come down further through here. So I'm aware of that. We're playing for that as well, and we are currently short in the market, and we can look at short-term trades and long-term trades. So we need to accommodate both aspects of wave 4 being correct here with wave 1 and 2, and we also need to be mindful that wave 5 could be in play here, and we've got wave 1 down and wave 2 coming back here. Now, one of the other things too is that the move from the low to the current high up here, the 50-60% retracement level, let's just drill in a little further. So the move up through here and the move back, the 50-60% retracement level is here. Okay, so what I'm about to say next is not really in the books, but one way of looking at the situation is that if whatever we get between this top here and the 61.8%, that's going to be very helpful, because if we get 3 waves to the 50-60% retracement level, then we know that we're corrective at that point. But if we get 5 waves to the 61.8% retracement level, then we know that, well, because we've got 5, we're going to get a counter trend 3, and then we're going to go down further from that point. So one of the things that we will be looking at as the move matures, we'll be looking to see if we're going to get 5 waves or 3 waves down to the 61.8%, which is roughly the medium level here. With all of this. So there's also pretty much 3 levels of support as we go down. Obviously there's more, but the big ones are where the bottom of wave 4, the top of wave 1, and the low of wave 2 here. So they're the 3 support levels on the way down. Of course there's more smaller ones, but they're the sort of 3 that we'll be looking at in terms of seeing bounces in the market. So we're also going to have a look at this wave 4 here, and we've got this as wave 1, 2, and 3, 4, 5 here for 1 and 2 here. But we could also count this up as corrective as well. And let's just go in and have a little look at how we've counted it to the upside. So in this instance here, we've got 1 ABC for 2, and then we've got 1 and 2 here, and 3 here, and 4 here, and 1, 2, 3, 4, 5 here. I know this has got overlapping wave structures in here, but I've looked to the NASDAQ, and the NASDAQ was leading in this case, and it's got a nice 5-wave sequence through all of this area through here. And it's the same here as well. In fact, the S&P led to the upside here and gave us a nice 5 waves, where the NASDAQ had this wave 1, 2, 3, 4 here. It pulled back lower over wave 1 here, but in that case I took the SP 500 to be the correct count. So I've been using both of them to help me navigate what's right and what's wrong. Now this particular count up through here, to count this as 5 waves up through here, one of the things that we've done is we've looked at this little move in here as wave 1 and 2 here, and then 3 and 4 here. It's a little bit dodgy, this move here. This is really the weak spot in the whole count to the upside, because otherwise we could look from this over here, we could look at this being wave 2 here, and looking at this as 1 and 2 and 3 and 4 and 5 here. So in that case we would be looking at the rally to the upside in terms of an A and a B wave to here, a B wave to here, and then 1 and 2 and 3 and 4 and 5 for a wave 2 up here. So that's all possible. And in this case here, we want to see 5 waves down to the 61.8% mark, which is the 2,500. So really what we want to do in both cases here, we currently short in here somewhere, but once this low lands here, and normally we can look at the 61.8% from this low to this high here. So we're pretty close on that situation now in terms of the 61.8%. So we can probably get a little, we may see another little drop down into the 2.8 here, but we'll talk about that when we get to that space. But what we're really looking for is we're looking for a very clear definition that we've got wave 2 in place. So there's no need to chase the market, and even if it drops down into the 2.8 here where there's nice support here, you'd still really want to wait. This is the trade through here. So this ABC pattern here, because we'll have 5 waves here, and we do, then we're going to see another move down in this space here. So this is the one that we want to catch. And this should retrace 61.8%. And this is the same count for the other count, the main count that we have here. So in this case here, we can actually count 5 waves down to this point. I've actually got 2 counts coming down here, but let's just stay with this one for the time being. This move down through here would see wave 1 here at the 61.8%, and then we would see an A wave, a B wave, and a C wave here. And what we're looking for here is we will definitely look to short here. So I'm just going to put this in green here. And it's not that you need to shovel all the money in at that particular point, right? What this means is that we can start building trades in here because we need to manage our exposure all the time. So we can add below this level here. This will be, because it's a wave 2, we'll be looking for 5 waves, 3 waves, and 5 waves. So we'll be able to, there's many roads to Rome, so to speak, so we can actually build in here, under here, and through here, and so on through here. So this countdown through here, if I take it as this tick chart here, I'll just put this in. So from the top here, we'll just go over it a little bit so you can see it. So we've got 1, 2, 3, 4, 5 here, and then 5 in the last one here. But notice that we've got, when we look at the secondary count, this one here has got a bit of an extension in it here, the fifth wave. This fifth wave's got a bit of an extension in it as well. So that our secondary count that I'll be looking at will also have an extension in that space there as well. But in this case here, we've got 1 and 2 here, 5 waves down for wave 3 here, wave 4, and then wave 5 down for wave 1 here. And in that case here, we've got wave 2 here. And this wave 2, by the way, hasn't pulled back 61.8%. So we'll note that as a bit of a footprint, fingerprint, DNA, whatever, of all the wave 2. So this wave 1 coming back up to this wave 2 over here. It may not pull back to that 61.8%. I just got to double check that to see if that's right, because sometimes I just put things in somewhere that roughly right a few days earlier on things, so continue to sharpen things up a little bit. Wave A would come where wave 4 is been, this would pull back 61.8%, then this would come in, and then this one here. So we'll keep sharpening that up here, not to worry too much about that for the time being. But yeah, like I said before, is that we want a really clear definition that we've got a corrective move in play. That's what we're looking for. That's what we'll short. As far as it goes here, I've got this down here from wave 2 as wave 1 and 2 here, assuming this is wave 3 here, which is fine. 1, 2, 3, 4, 5. Yep, that's cool. 3, 4, and looking down for 5 here. That doesn't count that well in this space, but having wave 3 here, I put wave 3 here because wave 4 is nice and sideways in this particular case, and then looking down for wave 5 here. So we can have it in play here. The other count that I've got, which this is 100 ticks, so I'm going down to 10 ticks here. So from wave 2 here, we know that wave 1 is correct, not a problem. And then 1 and 2 and 3 here and 4, and I'm looking at 4 here. And then this little thing here that didn't count right as 1 and 2 here and 3 here, because last time when I had this here on the other chart, I had this 3, 4, and 5 here. But in this case, I've just got 1, 2, 3 here, 4 here, and then 1 and 2 and 1 and 2 and 3 and 4. So coming just down to wave 3 here. So in this case here, we may just get an A and a B and a C back to the 38.2% retracement level in this space, and then drop down to the 2800 area here, and then move up from there. So that would look a little bit like, this is sort of my alternative count. That's a bit weird. Oh, no, it's not weird. Sorry. Just got the wrong chart. Sorry about that. Just scroll that one back over on that screen and put this on the 15-minute chart here. So this is sort of my alternative count here, where we have all of wave 1 here and 2 here, and then all of wave 3 here, back some sort of little thing. It may not come back that high. It may just hit the level here, which is the midpoint, the 50 here, and then drop from that point. So be mindful of that. But look, in the bigger picture here, we want this structure to complete and land, and we'll know that when we start seeing a decent bounce in all of this space here. So any trading that you've done in through here, you really need to cover it into the 2800 area here. And then we're going to sit tight. I'm not that keen on trading this correction. I don't want to get anxiety with trades in the market sitting in a rally here, when we can just be observant and and not worry about having money in the market. So we're more detached and we can be better analysts and then look for the better trade into the market. And this is the side that we want over here. So we'll need this to mature, and then we'll start building in over this side with this. Just wanted to, because we do want to short that area there. So that's that really. Yeah, so just to recap a little bit, I've got wave 1 low in place here, or we've got wave 1 sitting here. at the end of the day, of course it matters, but for what we're going for in the bigger picture, it doesn't matter. We just want to see this land and have a decent bounce off the 28. That's basically what we're looking for. And as this progresses through here, then we can then we can look to short on that side. I want to have a look at the NASDAQ here for a moment. Just so it's in the same situation as well. One of the things here, though, is that, we've got the same problem here in terms of this A wave here and 3 waves up into this space here. And, a lot of the big stocks, the stocks that have created this particular pattern, they're the stocks that we could also look at as well. So, they've got the same thing going on. So there's a good case for this wave 4 being in place here. But like I said, we don't want to stick our head in the sand and miss a massive third wave to the downside coming down through here. We don't want to miss that, So, if we were analysts, we would be more, we would care more about if we were right and wrong, because you make a living off that. But because we make a living off the money that we make, we're more interested in just making the money, and the analysis is secondary to a point. So the trade setups and the money management and those things become really important at this point. But anyway, this is the count here. The 61.8%, or the retracement we're looking for, is down at the 8,000. So the 6,500 is halfway between 8,000 and 5,000, which are major trading levels, and they've got the medium trading level in the middle, the same between 8 and 10 here. And these are Fibonacci numbers coming up the side: 1, 2, 3, 5, 8, and then back to the power of 1, power of 10 again. So in this case 10,000 or 1 rather. Then you'd go 10,000, 20,000, 30,000, and they're all major levels. 9,000 is a medium level, and this is where we've seen the turn occurring now. So let's go in and have a look at this here. So in this case here, we're looking for 1, 2, 3, 4, 5 here. The NASDAQ traded much higher here and also traded lower here. So it's one of the reasons why we can look at it as being some strength in the market. At the same time, though, we've still got the same support lines. We've got the bottom of wave 4, top of wave 1, and wave 2 here. So, but we'll also just really use the levels in here. I mean, we've just got the big numbers here, the 8,000 and the 9,000. And of course, between 8,000 and 9,000, we can also put the Fibonacci levels in as 100, 200, 300, 500, and 800. 800 will also have group 2 in there as well: 65, 72, and 80. Yeah, so look, this is what we're looking at. We're looking at an A wave, a B wave, and a C wave here. Wave 2s are normally, when we have the A wave here, this will be a 5 wave, 3 wave, and 5 wave structure. So we're looking for 5 waves in the first wave as wave A, and then 3 waves for wave B, and then 5 waves for wave 5 here. And one of the things we can work out if we're on the right track here is that normally the A wave is the sharpest, then the B wave, and then the C wave. So we'll be looking for an A wave being sharp, B wave, and then a sort of a slower, more of an angle for wave C here. And then that will help us know that we're on the right track. But if we see wave C acting really powerful coming down here like this, then we know that we're in a wave 3, and we'll have to switch these around here with wave 1 sitting over here and wave 2 sitting up here. Let's go in a little further here into the 4-hour chart. So this is what we're looking at here. Just open it up with 1 and 2 here. Nice 1, 2, 3, 4, 5 here. Wave 4. The reason I like this too, because wave 4 is also pulled back to the 38.2% retracement level. So that makes it nice and tidy on the S&P mainly. And here once again, we're looking down at wave 1 here, and yes, it could just drop a tad further, then wave 2, and it's this wave 2, this is the one that we're interested in. This is the one that we're going to trade here, and then we'll trade this all the way down for 3, 4, and 5. But we'll work all of that through. I mean, everybody's, you know, people say that, you know, they'll trade on a 5-minute chart or a 4-hour chart or something or rather, or whatever. And that's okay. But when we're using Elliott, it's better to kind of choose the degree of structure that you trade. So if you trade this minute wave here, then that's what you trade. You'll get to wave 3 and you'll get out. But if you're trading this structure here to wave 5 here, well, then you would hold it all the way to wave 5 and you'll hold it all the way to wave B. So choose a degree of structure that you have time for, as such. And the bigger the structure, the easier it is to trade. And in most cases, the more money that you'll make until you develop a skill set that's, you know, just as sharp as a razor. Anyway, we've broken this trend line here, and we're looking at 5 waves in this first move here. This move, second move that comes into play here, that's going to be in 3 waves as well, an A and a B and a C wave. Doesn't have to pull back up to the 61.8%. It might just come back up to these sorts of levels. The 800 here is really important, as you can see. So there's a few little hurdles that we need to get through here. I'm not sure what charts I've updated here. Let's just see this wave 4 here overlap wave 1, but because it didn't do it on the S&P, I had to go with it. I had to go with the S&P count, and that's why it's sort of helpful. This wave 4 pulled back to the 38.2% retracement level. So it was really interesting using, well, we also used Amazon in the mix as well a little bit to make all of this accurate. So just checking here. So yes, look, what we're looking for here is obviously we want to, that little target there, that's not what I want to do. This is the one that I want. Configure that. We want to put that in green, just to put that there. And there's many different ways of getting into this here as well, but we're looking for a 3-wave move, and we want to be shorting, you know, in these legs, all these here. This wave 3 will have 5 waves in it as well. So we want to capture, there's a beginning, a middle, and an end of a trend. So we want to build at least 3 trades into this here. You know, we can also have 4 or 5, but that's okay. But we need to be in at the beginning. We need to build in. We need to feed the trend in the beginning, and that's the most scariest part. You know, that's the trickiest part. Once the market starts moving, well, everybody sees it moving and they get in and start chasing the market. And yeah, it's fine if you're quick on the buzzer. But yeah, okay, so we're looking for 5 waves down through here. I'm not sure what I've updated here. I'll just check the tick chart first. Okay. Let me 1, 2, 1, 2, 3, 4, 5. 1, 2, 3. So this is, yeah, wave 1 and 2 here, so that's cool. And then we've got 1 and 2, nice strong 3rd wave here, and this could also be part of the 3rd wave as well. This one's moved back up, so definitely we've got the 3rd wave sitting on the low here. I just got to kind of find out where the error is in here, but that's all okay. I'm very happy and confident with that, and I'm also pretty happy and confident with this here by the looks of it too. So just let me have a little deeper look inside here. We got the beginning here, we got the middle here, and we got the ending structure. So you got the beginning, the middle, and the end. The beginning and the end are kind of normally the same, with the extension in the 3rd wave there. So that would be well, 1 and 2 here, and then 1 and 2 and 3 here, 4 here, 5 here, or is that the A, B, and C wave here? Not that it matters. 8, 7. So I'm calling this in as a low, and we'll start to look at this market move up into this space here. Okay, yeah. Look, I'll just leave it at that. There's nothing really to do for the moment. Actually, there's no point in shorting. We got shorts in the S&P, so we're okay there. The target for the S&P is 2,800, and we need to just wait for this corrective rally here. Just want to go back to the S&P here for a moment. So you don't have to take profit down here for this, but because the market can just continue to cascade, and a trailing stop is always a good stop, but perhaps think of, everybody's doing different things, so it's hard to accommodate it all. Like I said, you might want to, I mean, because this is in 5 waves, we're going to have, after a correction that could pull back 60%, or it could pull back 40% or 50% and then drop again. So I'll leave it up to you with what sort of skin you want in the game. If you're looking for a way to get all the way lower there, then we could just use it as the weekly robo. So looking to be short here with the stop above the top here. And like, we just keep moving the stop down. So in this case, if we were short in here, we'd just keep moving the stop down. This is the weekly robo here. And then on this side, we'll be flipping it over to the long side. We'll be at the long side. And now we can look to be on the short side here. So we'll just, one way to get down here further is just to keep the stop at the top of each weekly bar. It's a lot of pressure, but that means you need to trade less. But most people overtrade and struggle with their accounts anyway. So if you're doing that, if you know that you're overtrading, trading too much for what your account's worth, then, and you only have a small account, well, then a longer term view would be okay, wouldn't it? So even if you're just trading one CFD contract and making $1 a point, I mean, that's something, and then you can look to build that later. But if we're going to enter this third wave here, or if we're going to enter a third wave down here, one way we are, we want to be on that third wave. So you don't want to be out of cash the time we hit wave 3, either here or down below. So be very careful what you do. Okay, cheers.